Nitin Aggarwal from Motilal Oswal, who's joining us to talk to us about what's happening in the financials vertical. Nitin, hi, that's exactly the first question. You have one of the most aggressive target prices now on Paytm, above 1,000 rupees. You're recommending the clients to buy this dip?
Yeah, hi, good morning. So clearly, it's a very evolving situation at Paytm. Last 1 month, we have seen even recently only a regulator also announced an increase in risk weight, and banks and NBFCs therefore accordingly are trying to control their exposure to the unsecured loans, especially the lower ticket size. And that has had impact on the Paytm also, wherein the company announced that they will want to scale down the postpaid business. And I believe that this is a very evolving situation. You will want to see as to how this pans out over residual FY24 and then in FY25, because recovery can be fairly quick. It's like you don't know as to how long will it go on and what could be the asset quality implications from this. Because in the yesterday's call, the company indicated that there has been no change in the asset quality metrics. They all are going pretty steady, and they will look to compensate for some impact of the reduced BNPL sourcing by going in the higher ticket segments of personal loans and merchant loans. So a lot therefore will depend on as to how much they can compensate by growing in those segments. And given that the ticket size that they are looking at there is significantly higher, between 3 to 7 lakhs, that over a period of time can help them offset the impact on that overall loan disbursements on the platform in the near term. But because in the short term, yes, there is an uncertainty around, and which is why the stock has reacted in such a volatile way. And one can only look at things to normalize over the medium term. So, which is where we have maintained our buy on the stock.
Expecting some sort of semblance and normalization to happen. But what about the second order impact? Of course, there's a rub-off impact today on EB Capital as well, even other NBFCs which have high exposure to unsecured lending, the likes of Bajaj Finance, L&T Financial Holdings, small finance banks, the likes of Ujjivan, Bandhan, etc. What do you expect the second order impact is going to be? Because initially all of these banks and NBFCs had come up with clarifications that they're not going to be impacted to a huge extent. Do you expect some sort of change in that entire commentary?
That's quite a possibility, yes, because regulator clearly has a lot more data than what anybody else has. And if RBI has taken this step, certainly the delinquencies in the small unsecured lending space has been seeing a rise, and which is making regulator uncomfortable. And while large banks in our recent interactions are guiding for a lot of steadiness in their portfolios and not looking at that much of risk, but these mid-sized banks and the fintechs, NBFCs may report some stress in the coming quarters, and which is where the stocks in general, wherein the exposures are there to these unsecured segments, have taken a slight beating.
Nitin, would you want to clarify a bit more in terms of which are the stocks and companies which might get the most impacted, if any study you have done around that?
So see, within the banks, if you look at the large banks, they generally give out unsecured loans to their own internal customers or to the customers who are working with the top-rated private corporates or the government sector, which is like the case with SBI. But the mid-sized banks or the NBFCs who are more active in unsecured and wherein the clientele is not so strong, they could be more impacted. And so within banks, probably, I don't want to take out names, but wherein the growth has been a lot more on the unsecured, especially in the PL credit cards, and they are the spaces wherein one has to watch out for risk.
Sure, no point taken. Completely appreciate that. But the other sector or stock that I want to discuss with you is LIC. And let's pull up this week or probably the last 7-day chart, and you'll see that the stock has managed to gain 20-30%. It's very close to that 800 rupee mark. What explains this move? Was it just undervaluation that people are waking up to, or this new product that they had launched is something to do with it as well?
I think LIC over a period of time, if you look at over the last 1 year, has got significantly derated. So part of this re-rating, I will say that was expected, and which is one reason why we have also been writing like 40% sort of upside notes on LIC in our recent result notes. And but a good part of it is also related to the performance of the overall insurance sector in general. If you look at the other insurers, they have all seen fairly good re-rating over the last few quarters. And that's primarily because the return ratios for these companies still looks to be quite strong. While the year started on a weak note with the changes in the budget announcements about the high ticket, the taxation that got imposed on the high ticket policies, but overall the insurers have comparatively done still better and are looking for a much steady growth in FY25. Now, LIC in that backdrop, because of the entire positivity that has got built around the PSU space, and with the new product that is coming, wherein they are looking at a much better traction in the premium numbers, and alongside the overall market tailwinds, because a lot of the EV growth for LIC comes from the positive move in the market, as they have a very high sensitivity to the market movement, and which is where we are looking at a very steady EV growth for LIC for FY24, and that will likely continue in FY25 once we have the elections getting over. And even the margins, LIC has improved to 15%, and this number can again move up because the new product launches they're doing, along with the improved profit sharing that will come into force from FY25, will also give some support to margins further. So I think all these metrics and the cheaper valuations have led 30% move in LIC in the last 1 month or so.
Okay, at least that explains partly why we have seen that move. Thanks so much, Nitin, for making time and speaking with us.